Hi, my name is John O'Connell, and thank you very much for joining our presentation today on Rise of the Activist Investor. So in this presentation, we're going to cover a variety of different things. We're going to discuss what is a traditional activist investor, where do they come from? You're probably familiar with some from your history classes, or if you've gone through a finance or been in finance for a long time, you're probably familiar with quite a few of them. We'll talk a little bit about some of them today. Then we're going to talk about this confluence of forces that are coming together to create a new class of activist investor. And what are those forces? How are they coming together? Why do they matter? Then we're going to talk a little bit about beyond ESG and SRI, because I think what you're seeing today in the market is this huge growth of ESG ETFs, electronically traded funds around ESG and SRI, and even faith-based investing. We'll talk a little bit about that, how that's going to lead to direct indexing for some, and then how is that going to lead to more activist investing that you'll see in the marketplace. Then we'll take a look at this activist investor arc that I invented for my book, The Rise of the Activist Investor. We'll talk about what is that arc? How do people become activist investors? What does that arc mean? And how does it fluctuate throughout their lives? And quite frankly, throughout their level of participation in activist investing. And then finally, we'll talk about what is this rise of this new activist investor class? What is this rise of the activist investor? What does it mean to financial advisors today? What does it mean to investors today? And how does that confluence come together? We'll also touch a little bit on what does that mean for asset managers in this changing marketplace. So first, let's start off with traditional activist investors. So many of you may know that the traditional activist investing started with Isaac Le Maire. Now, for those of you who don't know who Isaac Le Maire is or his background with the Dutch East India Company, let's cover it really quickly. Isaac Le Maire was actually a co-founder of the Dutch East India Company, which was at the time in 1602 when they founded the company, that was the premier trading capability in the Dutch East Indies. The Dutch East India Company traded all over the world, and Isaac Le Maire was on the board of directors for the Dutch East India Company from 1602 when he co-founded the company to 1605 when he was forced out of the board of directors under suspicion of a whole bunch of different financial issues. But Isaac Le Maire was still a huge shareholder of the Dutch East India Company. And at the time, the Dutch East India Company had an enormous amount of wealth. Now, they were using some of that wealth to help various countries in different wars. So they were helping England for a little bit. They were helping France for a little bit. But the reality of it was the company did have an enormous amount of shareholder value locked up in the form of cash that was in the company. And Isaac Le Maire started in 1609 by documenting his concerns with the direction of the Dutch East India Company and sending the first of what became a series of very public letters voicing his concerns to various directors of the VOC, which is the Dutch East India Company. Now, this may sound very familiar to activist investors that you hear about today, as they send open letters to the board of directors. Isaac Le Maire started that with sending a series of open letters to the directors of the Dutch East India Company. Like many activist investors, the board of directors did not like his suggestions, nor did they implement any of them. So in 1609, Isaac Le Maire formed Groot Campaign, which was known as the Large Company. And he launched a very public fight with the Dutch East India Company. His large company or group campaign was really a investor syndicate that was formed with the express purpose of unlocking his value or destroying the Dutch East India Company, whichever came first. So you can see activist investing really had its start with investors, shareholders like Isaac Le Maire, who were trying to unlock value within some of these companies or promote change within the company. In Isaac Le Maire's letters, he outlined a variety of changes that he expected to see. That formula was used again and again throughout history and very famously used by Benjamin Graham. Many of you may know Benjamin Graham as one of the founders of our capitalistic system here in the United States. Benjamin Graham actually started, believe it or not, as an activist investor. In 1926, he wrote a series of letters to the Northern Pipeline Company. He had done some research on the Northern Pipeline Company and found that it was sitting on a large number of railroad bonds. And those railroad bonds were worth quite a bit of money. Benjamin Graham, being a shareholder, wanted the Northern Pipeline Company to liquidate those bonds and then share the wealth with the shareholders. He started off with a campaign to the Northern Pipeline Company, who politely said to him, "Hey, running a pipeline is pretty difficult, and we appreciate your ideas, but we're not going to follow them." So Benjamin Graham decided he would attend the board of directors meeting. Back then, you had to attend the board of directors meeting to have a voice. So he traveled to Chicago to attend the meeting and found that the board had moved the meeting to the day before. So Benjamin missed the meeting that year. He went on a campaign to go out and meet with all of the leading investors for the Northern Pipeline Company. He met with all the key investors, the ones that had the most shares, the largest shareholders. And he convinced them that unlocking this value and being able to have that value given back to the shareholders was absolutely critical. And it was something that he felt very strongly that the Northern Pipeline Company should do. The next year, he showed up at the board meeting with a team of lawyers and the backing of the largest shareholders. And they did release, they did sell those bonds and then release it in the form of dividends over the next several years to the shareholders of the Northern Pipeline Company, including Benjamin Graham. Many of you may be familiar with some of the largest corporate raiders like T-Bone Pickens or Nelson Peltz or Carl Icahn. And then some of you may be familiar with hedge funds that have gone on activist investing. Most recently, Engine Number One, who fought and won a very large win against Exxon regarding their climate change initiatives. And then finally, some of you may be aware of ultra high net worth individuals like Ryan Cohen, who's the founder of Chewy, who went and amassed this huge amount of shares, most notoriously with Bed Bath & Beyond, which he sold that position, and then in GameStop, which he has successfully instilled himself as the chairman, and then 3 other members of the board from his days with Amazon and Chewy, so that he can change the direction of that company and return it to, as his opinion would say, the glory of the days of GameStop, where they were the largest purveyor of time cards for game codes within the industry. So all of these have started with individuals who wanted to either change the direction of the company or to be able to unlock value in the company. So that you would think would require amassing a large number of shares, but that's actually not the case. Carl Icahn most famously recently was able to amass only $50,000 of outstanding stock of McDonald's and was able to get his daughter on the board of directors of McDonald's to change McDonald's direction in the handling of animals as they go through their supply chain. So it doesn't take a lot to really change this, the direction of a company. We'll talk a little bit more about that throughout the presentation, but retail investors who band together can actually amass a number of shares, register themselves as a wolf pack, and then be able to change the direction of the company. So let's talk a little bit about some of the changes. Why do we see this big change? What's going to happen that's going to drive some of this change throughout? What's going to cause this rise of this new activist investor? Some of that is social movements, and we'll talk a little bit about that. Some of it's market access, and we'll talk about that as well. And then some of it's technology that's given people the ability to really communicate with other like-minded investors and to be able to amass shares relatively easily. So everything that we're going to cover has happened in the last decade, which is actually pretty amazing when we cover the breadth of what has happened that's really creating this confluence of forces that's causing this rise of the activist investor. Let's talk first about the social movements. In the past decade, you've seen an enormous amount of social movements here in the United States. It started with Occupy Wall Street. And for those of you who are in the New York area or who watched that movement via the news, You know that the protest really started by people occupying a small park, Zuccotti Park in Lower Manhattan, and really protesting against the inequality and the influence of money within politics. You know, that kind of continued throughout the rest of the decade. The DACA and the Dreamer movement that occurred in 2012, the fight for 15 in 2012, which was really a fight that was launched at a federal level to change the minimum wage from $7.25, which it had been that minimum wage had stayed stagnant since 2009. When that movement failed to change the minimum wage at the federal level, it moved to the states, and it was able to succeed in changing the minimum wage in over 30 states over the next several years, which then forced the federal government's hand to be able to change the federal minimum wage moving forward, for the sheer fact of just remaining competitive and listening to the movement that the people had launched around the pay scale and the pay differentials. That continued with 2013's Black Lives Matter, which not only focused on the discrimination that Black people were suffering from in the United States, but also continued to the economic disparities that they felt that they had, the lack of opportunity that Black people felt that they have here in the United States. And that's continued still through today. The indigenous population launched their own movements in 2014, including, very famously, you'll see a lot of athletes had a red hand on their face to raise awareness for the treatment of indigenous women and indigenous women's rights. And that movement sparked a very large photography exhibition that highlighted the red hand movement for the indigenous rights movement. The LGBTQ movements that happened, that started in 2011 with the repeal of the Don't Ask, Don't Tell law, and then continued through the repeal of the Defense of Marriage Act in 2015. That all kind of led up to this Women's March that occurred in 2017, which was the largest social protest in US history. Think about that for a moment. That march not only occurred in Washington, D.C., but it occurred in innumerable cities across the United States. And that, one could say, set the stage for the Me Too movement, because so many women felt that they, from the Women's March, that they had a voice to be able to stand up and say no more abuse within which kind of launched that Me Too movement. We've seen all of the investors go through all of this social change over the past 10 years. And that's really affected their view of money, of their investments, and how their investments should reflect their values moving forward. And you've seen that manifest itself in many ways. When you think about now what you've got with, couple that social movement with this unprecedented market access that people have now in the markets. It started really with the race to zero, being able to get down to zero trading fees, and then that has changed significantly. The voting power shifted with that race to zero. Right now, coming out of 2021, retail investors account for 52% of all of the global AUM. That's pretty amazing when you think about the amount of AUM that's out there. That's a huge decline. If you looked in the year 2000, about 40% of the global AUM was in what we would call legacy institutions, pension funds, sovereign bank accounts, foundations. That legacy institution decreased. In 2021, the exit of legacy investments in global AUM, all AUM globally, was only 25%. So you're seeing this massive shift from from institutional investors with block level voting power to retail investors. And now you're seeing legislation come out. The new legislation around universal proxy card will enable activist investor and activist investor groups to be able to have their slate of the board of directors on the exact same voting card as management's slate of the board of directors. In the past, that was not possible. In the past, you either voted the management slate or you voted the activist or the alternative slate in their entirety. Now you have the ability to remove specific directors because of the universal proxy card. You can vote for specific directors. So you can vote for some of the activist investor slate that's been raised, or some of the employee slate that's been raised, and still vote for some of the incumbent directors within the firm. So that huge shift in not only the market access, but this voting power shift, where retail investors are increasing significantly their share of global AUM, couple that with new legislation like universal proxy card, couple that also with the fact that there is a large discussion right now happening around pass-through voting. In other words, the institutional investors that are managing, for example, a 401k would have the voting pass through them down to the individual retail investor who actually is holding the shares within that ETF or mutual fund. If that were to happen, even more power would be moving into the hands of retail investors beyond what they already have. They already have the capability to outvote essentially any institutional investor at this point if they get a large enough voting block. Now let's talk a little bit about the technology that's enabling this. So you've got social media capabilities like Discord and Facebook that enable investors to find other like-minded investors and band together in investing clubs. Now, one may think of a traditional investing club perhaps as a room full of older folks that are kind of getting together. That's not the case anymore. Investing clubs today do have young investors that are banding together to be able to have their investments reflect their values, and they're doing that through social media like Discord servers, Facebook groups. Couple that with the fact that young investors today have market access literally in their pocket. With the rise of platforms like Robinhood, Webull, SoFi, Betterment, they have the ability to access the markets in a way that even 30 years ago, when I started my career at Merrill Lynch, no one had access to. And now you can initiate trades right in the palm of your hand. With Robinhood's recent acquisition of Say, they'll also enable investors to be able to vote proxy right on their phone. There are companies like Broadridge, obviously, that have enabled that for some time, but Robinhood being able to integrate Say into their overall platform will give that unprecedented level of voting power at the proxy season on corporate actions in the hands of individual investors. So when you think about all of this coming together, the changes that we're seeing from a financial provider's perspective, from a wealth management perspective, are probably not going to hit the mark from what we're seeing, the demand that we're seeing today. When you think about how are we reacting to these confluence of forces today? Well, in our industry, we're really taking a look at ESG on the rise and SRI. ESG being environmental, social, and governance, and then SRI being socially responsible investing. Couple that with other investments that are coming up, like faith-based investing, where you see the Jewish American Fund launching their own ETF capability. You see the Knights of Columbus launching their ETF capability. That's where you're seeing faith-based investing on the rise. They would not be launching these products if there was not a demand from their community of members to be able to have their investments reflect their value set. You know, ESG is probably one of the worst titles that we could have in the industry. Everyone looks at ESG today and they're all trying to break ESG down to a score. Let's give something an ESG score. That, I think, is very much oversimplifying what ESG really is. When you think about environmental, social, and governance, ESG incorporates 168 different factors under that E, S, and G umbrella. Let's think of governance just in and of itself. Governance is what's your accounting board made up of? How many women do you have on your board? How many underrepresented investing people do you have on your board? What's the employee representation of your board? Is it truly independent? How many of the board members are independent, or how many of them have direct relationships with your CEO? Is the CEO the chairman of the board? That is a governance problem in many cases. And then how many shareholders do you have represented on the board? All of these are just factors that all roll up under governance. And I'm giving you a very small subset of the factors that roll up under governance. But I think it does paint this picture of ESG is a very complicated investment and set of investments, and a way for us to try to provide products to clients and investors to kind of tap into that real confluence of the activist investor that's really driving their investment behavior. So if you think beyond ETFs and mutual funds, you start thinking about direct indexing that's on the rise right now. The cost of maintaining direct indexing is coming down. Fractional shares are now available almost everywhere. So the cost of maintaining a direct index is being reduced significantly, which you're going to see more and more high net worth and ultra high net worth investors move beyond ETFs and mutual funds into direct indexing, and then ultimately, I believe, into activist investing. So when you think about the activist investor, I invented this activist investor arc for the book. And what this does is it really does tap into what is an activist investor. It's not a simple solution of, well, you're an activist if you're voting. So if you think about it, a passive activist is really that first step. That's a person who's interested in or has some awareness of activist investing, but really is not ready to participate in activist investing yet. Perhaps they're still doing some of their research. These are the people that are really investing today in ESG and SRI types of investments. Then you have the casual activist. The casual activist is going to invest in vehicles that are related to activist investing. They're probably going to be asking you more and more about ESG, SRI, or faith-based investments, but they're not really taking an active role in those investments. In other words, they're not voting in those investments, but they're asking you as their financial professional, as their financial quarterback, to have their investments reflect more of their values. That's why they're asking you for SRI or ESG. When you start thinking of active voting, this is where you're going to begin getting into this land of direct indexing or getting into individual share ownership, where you've got an investor who really wants to invest in individual companies with an activist motivation. In other words, they're investing in companies because they believe in the direction of that company. So perhaps they do not invest in Apple because they don't believe in Apple's labor practices, but they'll invest in SpaceX because they believe that investment is the future of the human race. So in many cases, you're really tapping in that active voter to individual investments that are reflecting their value set. Then you move into a beginner activist. And a beginner activist has an activist framework. They've got a framework built around themselves, most likely that they've taken either a behavioral finance test or they've taken a test that helps them to really hone in on their what type of activist they are, what do they care most about. And there are many of these tests out there. We cover a couple of them in the book as well. But this is where you've got a beginner activist who has this value framework, and they're really looking for their investments to reflect that framework. So they're actively talking to you about specific investments, or if you're not talking to them, they're doing it on one of the platforms like Robinhood, Webull, SoFi, and so forth, to be able to invest in specific companies that they care about. They will vote on proxy, on corporate actions for those specific companies. Then you get to the next level, which is an influencer activist. And the influencer activist is really going to be creating an activist platform. They may be tweeting about a company. They may be posting about a company with commentary. This is someone who's trying to influence other shareholders based on what they're seeing the company doing. And then finally, you move into this professional activist. Professional activists are the folks that are going to create an activist investing group. They're going to create an investment club. They're going to target specific companies with that investment club, and they're going to try to promote their value set within that company through proxy. So this is where amassing that small subset, like we saw with Carl Icahn and McDonald's, enables an investing club to be able to have a small set of the outstanding shares of a company and then promote change within that company. This is also happening, by the way, in our industry. Look at what's happening with Envestnet right now. They're under attack from an activist investor group that feels that the company has not really delivered on some of the value that they have from their acquisitions, and they're calling for significant change within the company's board of directors and in their leadership. If that's not a wake-up call for other folks within this industry who feel that activist investing just happens with larger firms, I don't know what would be. That is definitely where you're seeing a set of professional activists in the form of a hedge fund that are trying to drive change within that company. So finally, what is driving this huge rise of the activist investor? You've got retail activist investors that have lived through a decade of these social movements. They have unprecedented access to the markets through technology. And they have the means available to them with the change that you've seen of 52% of the outstanding global AUM sits in the hands of retail investors. And they now have the ability to vote anyone within a board of directors race. These investors care deeply about their value set and the direction that they want to move in. There's $84 trillion that may change hands between now and 2045 in the Great Wealth Transfer, according to Cerulli. The activist investor movements that you've seen throughout the 2000s, the unprecedented market change, and the ability for activist investors to vote on proxy is going to drive a significant change in this marketplace. If you as a wealth manager are not having active conversations with the heirs of your clients' money, then you're missing the opportunity to understand their value set, to really start a conversation about what drives their investments, and to determine whether or not any of those heirs are likely to become activist investors within the ARC, or whether they are going to become more of a passive activist, and they want you to be able to help their money to reflect their values. So the call to action for everyone that is able to see this presentation, if you're a wealth manager, the call to action is please meet with your heirs, take a look at the activist investor ARC, understand the mindset and the movement that you're seeing with a lot of your investors, and understand where they're going to fall in that ARC. By the way, their position in that ARC may change over time. If, for any of you who have ever had children, you know that your priorities change pretty significantly when you have children. You may be a very active activist investor and then start a family, and you may be less of an activist investor. And then as your family, becomes older or goes off to college, you may become more of an activist again. That position within the ARC will move over time, depending on the life experience that you've got at that point in time. If in fact in the book, Eileen, the protagonist in my book, The Rise of the Activist Investor, actually starts her activist investor journey because of some things that happened to a friend of hers being passed up for a promotion. And that causes her to learn about activist investing, launch her own investment club, and then launch a proxy vote. I hope you were able to enjoy our presentation today, and I really hope that you were able to get a lot out of the presentation. If you'd like to learn more, please reach out to me via LinkedIn. I'm more than happy to have a conversation. You can tell from my enthusiasm during my presentation, I love this topic, and I feel really passionate about it. And if you'd like to check out more, and if you'd like to check out the book, here's a QR code for you to be able to order the book on Amazon. You can also find it on my author website. Thank you very much for your time today. I hope you found this informative and enjoyable. Have a great day.